This is the MTPredictor weekly market update for January 26th. Pretty wild week. Even though there was not much in the way of economic data last week, we certainly had some market movement, several hundred points down in terms of the Dow. Here's the S&P. Let's kind of go back and see why we were anticipating potential selling once the S&P reached the 1800 level. And this is the monthly chart of the ES. Again, the software will connect these swing highs and swing lows for you. This was the prior all-time high back in October of 2007 before the 2008 crash. So it's a significant level there. I'm going to right-click and take a decision point. This will give us a future resistance level that we had on the chart ahead of time. Again, a leading indicator. And you can see this was on the chart here. This is the level we were looking at. We figured that the S&P would go for that nice round number 1800, but we're in that area of monthly major resistance here. Remember last week we were saying if we can get a clear close above this level, a candle close above this level, and whatever that high ends up being gets taken out to the upside, then we may just continue further up, and they will take this level out. In other words, the decision that the market will have made, that's why we call it a decision point. The decision that the market would have made is to continue higher. But we didn't get that. We got you can see the the month closed on the month currently is on a red seller's candle. Hasn't closed out yet. We got another. We're on the 26th here, so 31st will be the closeout date. We got a big week here in terms of economic data and Fed week. So we get another Fed meeting. We'll hear from the Federal Reserve Chairman and their decision on interest rates and any Fed speak that comes after that. So a big week in terms of that. Now, so we're in an area where, again, we said we anticipate the market could correct. We know in December we had our Hindenburg omen. Some people, don't like that, don't feel it's a good indication, but it is what it is, and it has preceded every market crash, going back, 40 plus years now. And so it's out there, and we were anticipating that the market was on shaky ground. Technically speaking, the internals of the market, that's what the Hindenburg omen basically tells you. So we were, in other words, we're in levels that we anticipate this was going to happen. Let's look at the Dow here. And let's look in terms of the daily chart so we can get a little remember here the Dow, here's your typical wave 5, so we had a nice 5-wave pattern up here right into the typical wave 5 resistance. So we anticipate when we go wave 5 up like this that the correction should be back to the wave 4 DP. So we're going to take a decision point off of wave 4, and this is the level around that 15,500 where we anticipate that the market should correct to. Now the way this unfolded is, you see we got a little potential wave 1 or A here, wave 2 or B. I projected the wave 3 targets down. We've hit the typical wave 3 target. Here's your maximum wave 3 and an extended wave 3 target. But here's the wave 4 DP. So we anticipate that we should get potentially more. We may get a little rally in a wave 4 and then a wave 5 down here. And that may unfold as a 5-wave pattern down into this wave 4 DP. Again, market will need to make a decision here around 15,500 to 15,360 area. In that area, if it holds as support, then the trend which was up prior should continue up. And basically this area is a weekly wave, potentially wave 4, and then we'd head into a weekly wave 5 up. Or if this level gives way to the downside, then we'd find the bottom of wave 1, this whole 5-wave pattern, they may decide to erase. And there's the next target if this gives way in terms of the daily chart, so just below 14,500. So let's just see the weekly chart on this. But there's our support there. Actually, let's look at, we'll go back to the daily chart. I want to look at the, since we haven't looked at it in a while, we'll look at the NQ here. Again, the NQ, 5-wave pattern up here. Typically, the correction's back to this level, around 34.75, the wave 4 DP. And we can look at the Russell. Okay, same situation. Russell is going wave 5 up, right into the minimum wave 5 target, correcting back to the wave 4 DP. These areas will then be critical. If these areas hold as support, then the trend which was up prior should continue up. If it fails and gives way, then we can go back to the bottom of the wave 1 there and get ourselves some new targets. Alright, so they may use the Fed announcement this week as an excuse to, let's go back to the Dow here, as an excuse to get into this level. We may sell off maybe Monday and Tuesday, and maybe a rally starts in here after the Fed announcement. Or they'll use the Fed announcement maybe as an excuse to take this level out and sell things off some more. So should be important levels here. Again, around that 15,500 in the Dow. If we look at the ES, again, here's that larger area of support. We've gone a little wave 3 down there. Let's just take a, I might have to do it from up here. We'll call it 1740, 1745 area in the ES in terms of the daily chart. Alright, over to the DAX. Again, the DAX, remember we had this 5-wave pattern up here. Again, correcting back to the wave 4 DP, almost there. Alright, so the question was, are we going to see DAX 10,000? Like we were talking about, if the S&P was able to close above its DP level on the monthly chart, then we may get that run. It didn't happen. Things corrected right in the typical wave 5 resistance. And again, we anticipate should correct at a minimum back to this wave 4 DP level. If this level gives out, then here's, again, we go back to the bottom of wave 1 here, take our decision point, and that's this level here. Oops. Alright, so if this area gives way, then we anticipate the sell-off is going to be below 9,000 in the DAX. If this holds as support here, then the trend which was up prior should continue up. Alright, so critical levels here coinciding with a nice Fed meeting. Let's look at gold here. So gold has been, rallying as of late. There was a little TS1 buy signal there. You see the target. We'll see if it has the steam to get there. Obviously, if the market's selling off, is what we kind of anticipated as well, is that these things may coincide. We get a rally in gold as the market tops and begins to correct. We'll see if this correction turns into a crash or not. We'll see. But if so, then maybe maybe gold does come back to that 1400 level. Again, here's your golden cross, your 50-period moving average crossing below the 200 period. Obviously, that's not a positive sign. If we look at these levels, again, the red is the 50 period, the dark blue here is your 200 period moving average. This during that bull market run for gold, we'll go back to the beginning of that run. Maybe go back to just around 9/11 from 2001. Right, you can see the golden cross to the upside here, where the 50 period is crossing above the 200. That started the bull market there. And you can see the buying opportunities came when the price came below the 50 period but above the 200 period. These were good buying opportunities in gold during that bull market. Okay, anytime you got those moves below that level. Right, here was the crash of 2008. A major buying opportunity here as it did get below the 200, below the 50. Again, deep. Almost to the 200 period, We got a nice buy signal there on the software, but another, even as the market was crashing and everything was selling off, gold still held above that 200 period. All right, some more buying opportunities there, and then we breached the 200 period, got the cross down below. All right, and so this level here, and we'll look at silver in a second. Is this just a bit of a bounce, before we roll over again? If we look at silver, we know that unfolded here as a 5-wave pattern down, wave 3, wave 4. Here's the wave 5 target around 1750. We talked about not a lot of volume in here. We talked about how you see the volume, how much the volume picks up at these turns. Again, high volume coming in at the turn, high volume at the turn. All right, high volume at the turn. We're not high volume at the turn. I'm not seeing that here. And you can see silver isn't quite following gold here. Sitting around 1980, looks like the close there. And so that target, that wave 5 target, is still out there. Now, this level that we're in, big level here, this was a wave 5 up. This huge top approaching that $50 level in silver. So we went beyond the maximum wave 5 target there. Again, see all the volume that came in at the top. We anticipate, here's the wave 4. We anticipate after wave 5 we get a correction back to the wave 4 DP. Boom, it was on the chart. Okay, a couple years in advance. And this is the area that we're sitting in. All right, we also had, if I can take my little drawing tool here, this level, I didn't want a vertical line, I want a horizontal line. If we take this level here, right, and you see that they broke down this level. Try to open this up a little bit. Broke down the level, right? Then a lot of times when the level breaks like that, you see we just had this basically this descending triangle, broke down. A lot of times you get a retest of the level before things roll over again. So the question now is, was this the bottom? And are we going to, if we fail to make a new low here, we're going to rally and make a big move? Of course, we don't know. I did buy some more physical silver down in this wave 3 low just in case that bottom was in. But the wave 4 developed, came right into the wave 4 resistance, rolling over. Here's your wave 5 target. It's still out there, stops to break even on the short side, and things still look more bearish than bullish to me. I know we're getting this rally because the stock market is correcting. We'll see how far that goes. If that Hindenburg omen plays out and it does turn into a 15% to 20% from correction into crash mode, then maybe this has a little more leg. Some of these precious metals have more legs to the upside. But if not, then I think these things roll over again and at least hit the wave 5 targets before new rally begins. So we'll see how that plays out. But anyway, this wave 4 DP, again, the market needs to make a decision here. If it holds as support, then the trend which was up prior will continue or should continue up. If this gives way to the downside, now again we're still in and around the level, if it gives way to the downside, then it's telling us again that this whole 5-wave pattern up could potentially get erased. And we'll take our DP off of the bottom of wave 1 here, and again that's around $10. So if this gives way, that's the tendency is that this run here will get wiped out, and we'd have maybe $10 silver. If it holds as support, again, then the trend which was up prior should continue up. So that's again make or break area. We talk about this a lot. We're going to make a break area in the stock market, make a break area in these precious metals. So again, Fed week should be a big week. Maybe it's quiet. Maybe we do some more selling Monday, Tuesday, and then after the Fed meeting, maybe we're in that support level, and we're going to see if it holds or not. And maybe they rally up that level. If not, we may go into full-blown, crash mode in the stock market. So, big week this week, and then we'll see where we go. We'll come back next week and see what happened and what things look like. All right. Have a good rest of your trading week. One last thing I did want to mention before I go. We don't do this very often, so I want to bring it to folks' attention here. Let's see, where's my... That's it. Usually once or twice a year we discount the software to this level, which is 20%. It's our largest discount that we offer. If you're interested in any of the versions of the software, version 7.5 is our standalone version that connects with eSignal or IQ feed. Works with any market or time frame so long as it's liquid. Got traders all around the world trading all the different markets around the world. You can use FXCM data with MTPredictor version 7.5 for you Forex traders. Again, instead of paying $19.95, right, it takes it down on $15.95, $15.96 with a $95 trial balance due after 15 days. Same with the MTPredictor add-ons for NinjaTrader 7 for you Ninja users. A 20% discount off the regular price of $19.95. If you want the professional edition, that's the add-ons for Ninja plus the trade module, so you can execute the trades right through Ninja to your broker. It's 20% off the regular price of $24.95. All right, so take advantage of that. If you're interested, you can shoot me an email, john@mtpredictor.us. Just come to the website and request some information, and we'll get that out to you. Make sure you're on the list, and so you can get the links for the discount. So have a great rest of your trading week. Take advantage of the discount. Get the power of the software working for you. Low risk, high reward trades. And we'll see you next week.